countries, and I think that's been certainly highlighted again in the course of the last year or so. And Russia remains a bit of a mystery to many people, given the corporate structure there and the ownership structure. So these are countries, and the acronym over them, which people are beginning to maybe put a few more question marks on as regards their long-term bankability, and beginning to look, I think, beneath them at some of the other smaller emerging markets, which have certainly a better track record and have gone through much more in the way of catharsis after crises, which has put them in good financial shape to withstand the storm that we've got in the global economy at the moment.
So, Jim, how do you see, or rather read the impact of the subsidy burden on India's fiscal deficit? I mean, what is your future outlook on the fiscal deficit as well as the government borrowing program, and how are the rising crude oil prices posing a risk to all these parameters?
Well, of course, the subsidy program is one of the key elements that's at the heart of the fiscal problems in India. Because there are subsidies there, it means that fiscal spending tends to be higher in times where prices, especially for the likes of oil, fertiliser and food, would be adjusting the demand and supply effects. So if you don't allow prices to operate, then you get all sorts of distortions in the system. This is probably best exemplified by what's happened in the power grid in northern India over the course of the last month. It's not just because there have been extreme weather conditions in India this year that the power grid failed. It's because the government has not allowed prices to rise, electricity prices to rise, in line with costs, which has meant that repairs in the system have not taken place, which has meant that electricity companies are shedding power rather than actually producing power, because they make a loss in every kilowatt hour that they produce. It's these distortions in the system that subsidies are at the heart of that cause a lot of the fiscal problems in India and a lot of the economic problems. And this is the whole point about government's inactivity over the course of the last few years. If government would actually look at the system as a whole, rather than at pure political gain over one or two prices or one or two subsidies, then what it would see is that it has distorted economic activity, it has distorted the price system, and is now paying the penalty for that. And the penalty is lower growth, which means that the fiscal deficit will worsen rather than improve, and that will make the whole thing worsen further. So it's in their own hands, but they're starting now from a position of weakness to address the problems in India, rather than the strength that they would have had 4 years ago, 3 years ago, when the government came back to power and the Indian economy was booming.
Jim, do you think India will be able to meet its fiscal deficit target for FY13, and would there be any slippages when it comes to the gross borrowing program?
Yeah, I don't think there's any chance of meeting the deficit target for fiscal year 13. It's probably more realistic than it certainly was for fiscal year 12, because it's at least above 5%. But I would be expecting that we'll certainly see a 6% budget deficit at the centre again for fiscal year 13, and possibly even a worsening fiscal deficit at the state level, so that the overall fiscal deficit in India comes in much closer to 11 or 12% rather than the targeted 10. That means that the borrowing programme will probably increase, which will further crowd out private investment and keep interest rates relatively high. It's a vicious circle, and it's something that the Indian government needs to break, but shows no sign and no interest in taking the initiatives that would break the vicious cycle.
What about the currency then, Jim? Because the rupee has been on a volatile journey against the dollar. Views seem split as to where it is likely to, settle down. But can levels of 58 to the dollar become a reality?
I would see a 58 level on the rupee as being an extreme oversold position. To be quite honest, even at 55, I think the rupee is oversold, and our recommendation to our clients is that, given the levels of the currency just now, they should be taking a position in the Indian stock market based on a US dollar basket that would give them some upside potential over the course of the next year, if the currency appreciates towards the 52, 51 level. Because if that happens, then the stock market is also likely to be going up somewhat. So we would be exposed to India just now on a trading basis purely because the rupee we think is oversold at 55. And I think we'll see some significant improvement in the Indian balance of payments over the course of the next 6 to 12 months as a result of that currency level. Enough improvement to bring it back towards the 52, 51 level, which even at that point would probably be slightly oversold, but closer to fair value.
Jim, do you expect Reserve Bank of India to adopt a hawkish or a dovish stance in the September policy, and do you expect inflation to take preference over growth once again?
I think the RBI is in a tough position at the moment as regards monetary policy, that it would like to loosen monetary policy on the basis of the economic growth numbers, and especially the industrial production numbers, which for June, which was released last week, was down year on year. At the same time, the CPI and the WPI, which it points to as being the kind of inflation numbers that it wants to see controlled, would suggest that it has to stand pat, if not slightly increase interest rates. We look at money supply and credit growth as the real drivers of future inflation, and when we look at them, actually we don't see that the RBI has much need of further tightening. It could actually loosen slightly. I don't think that's likely to be the case, given that they've tied their own flag to the pole of wholesale prices and consumer prices. So I think the most likely outcome for the RBI in September is doing nothing. That I don't think is particularly appropriate, but I think they've backed themselves into that corner. In the meantime, the Indian economy will continue to slow.
Jim, sentiment toward Indian equities has turned bearish, and you are also of the view that 2012 will be a tough year for equities. What's driving this bearish consensus, and by when do you think we will see a recovery, and what factors would this be contingent on?
Well, 2012 has already been a tough year for equities. They're in a very tight trading range, and I suspect they're going to continue to be in that tight trading range. The fundamental value in Indian corporates is still very attractive. The corporate earnings record and even the outlook for corporate earnings in the vast majority of Indian companies remains really quite positive. At these levels of the rupee, the Indian market, to my mind, looks positive and looks attractive, especially if you're a dollar investor. But at the same time, we have the likely slowdown in the economy, plus likely further bad news from the fiscal deficit position. So the attractiveness of the fundamental attractiveness and the currency attractiveness of the stock market is offset by the fundamental weakness of the government's position and the fiscal deficit. And I don't think that the Indian stock market can go anywhere significantly until the fiscal position, the fiscal problems are beginning to be addressed. So we continue to see a tight trading range with limited upside, if some trading possibilities to the upside over the short term, but certainly through the course of 2012 into 2013, I doubt if the Indian market is going to move above 19,000.
Okay, Jim, good to have you on the show as always, and thanks as well for taking time out and joining us on the show.